Okay, welcome back. Amnish Aggarwal, head of research, Prabhudas Lilladher is now joining us. Amnish, good morning. Good to have you with us here. I'm not sure while you were waiting, you could hear the Keynes conversation, the Keynes sort of management conversation. If you did, any thoughts, stocks in that space have come off 20-25%, maybe more in some cases?
Yeah, hi Prashant. This entire EMS space has been getting a lot of attention because there's a lot of growth momentum which is there. But having said that, if you look at the multiples, most of these stocks, I think barring a case here or there, they have been trading anywhere 40 times, 50 times. So there was no margin of safety. Now looking at Keynes numbers also, I think there is some cut in estimate which is likely to happen. Post the conversation which I heard. And then there's a lot of element of other income which is there in the profitability. And if you exclude that other income, I think the growth in the third quarter has not been that exciting. So I think looking at the market sentiment, I think in the near term, all these momentum stocks or the sectors, they are getting a hit. And I think Keynes can get some more hit that particular event. In the long term, yes, is import substitution and all those, I think things will pan out. But in the near term, all the momentum sectors are suffering. And given the fact that there's an equity dilution, plus the numbers have been, I think, relatively on the, I would say, lower side. And the next year's your growth projection, which the management cited anywhere up to say 43 to 4,500, that also looks quite, challenging task. So I think it's more like a wait and watch in the current scenario.
Okay, so you will sort of hold the horses there on Keynes Technologies. Amnish got that. Want to talk about, 361 Wealth Management. A lot of news flow coming in. They're getting aggressive in terms of their sort of positioning, right? With this BNK purchase, plus the numbers also came in yesterday. Overall environment is not very supportive of capital market related stocks. But how would you look at this one?
You see, if you look at the entire industry, it is getting actually consolidated. So this 361 actually it came out, I think, from ILFL at some point of time, and now they are going into, you can say, broking and all again. So I think if you look at most of the capital market entities which are listed today, so everyone today wants to have your entire bouquet of offerings under their roof. And to that extent, I think 361 is no different. So in the near term, yes, the market volatility is there and all the capital market entities, they are under pressure and they can come under more pressure. But in the long term, I think having a platform which gives you access to your in-house research, which can then be taken into other segments, I think that is definitely a positive for 361.
Absolutely, and I think it'll be interesting to see because that space, of course, in the capital market space has also been heating up. By the way, look at what's happening, Amnish, the other names, right? Novama is down to $5,000. You look at many of the others out there. It's all a function of capital markets and how they do. Any thoughts here on any of the other names? I mean, BSC, Novama, there are so many other, of course, wealth management companies listed now.
Yeah, Prashant, so typically what happens is that when the market going is good, so they all the capital market entities, depending upon what their business mix is, if you are having an AMC under your fold or if you are having a treasury and if you are having a broking, then obviously the overall volumes improve and your income goes up. In the current context, I think all the capital market entities can remain under pressure because kind of fraud we have seen in the markets, particularly from the last month or two. So I think 4Q numbers for all the capital market entities, they can come under significant pressure. So I think in the near term, capital market entities could come under some sort of a pressure. But yes, in the medium to long term, once the market stabilizes and the things look up, I think they should be again back into action.
But Amnish, in this entire financial space with what the RBI has done on liquidity, etc., even as a trade, maybe as a tactical thing, what looks best placed? I mean, is it something from the NBFC space? Is it large banks, mid-tier banks? What would be your pick?
Yeah, at this point of time, the large banks, like for example, if you look at even the numbers, your ICICI or the Kotak or HDFC, I think they look best because in terms of say numbers, in terms of balance sheet, they are well placed. But in terms of say purely the liquidity injection by the RBI, or if you are expecting a rate cut to happen towards the later part of this month, and I think the initial, you can say, in addition to banks, some of these your large NBFCs, they might also be the gainers.
Okay, all right. Let's talk about a couple of those coal/metal companies that came overnight. Amnish, what's your view? Coal India as well as Tata Steel, both those numbers are relatively better in comparison to our poll. Your take on them?
The numbers were better, but there is a probability of an estimate cut, for example, as far as the Tata Steel is concerned. And a lot will depend on how the global situation goes, both in terms of demand and also in terms of any tariffs, etc., which the US imposes. Now, in terms of steel, everyone is actually expecting and depending on if there is some anti-dumping duty imposed by the government, if there is an uptick in demand. In the longer term, things are looking reasonably good as far as your domestic scene is concerned. But I think a lot will depend upon, I would say, what happens on the international side, both in terms of demand as well as in terms of pricing. So not a very, I would say, aggressive calls to be taken at this point of time. And we would watch as to how the clarity emerges in the coming few months.
Okay. All right. Got that, Amnish. We'll leave it on that note. Thank you for joining in.